The turtle strategy is based on a price structure trap pattern. Once the pattern forms, it can lead to a swift and extended move. Patience is key when stalking trades while this pattern unfolds. The turtle feet is where new sellers often get trapped. As price rises, the turtle shell traps both buyers and sellers, causing confusion. Sellers place their stop losses above the shell area, adding pressure as price moves. As price comes back close to the turtle feet, new buyers may enter. Sellers near this area close their positions at a loss, adding buying pressure. The turtleneck marks the first swift movement, confirming the pattern. Look for additional confluence using tools like Flowmaster Alpha Omega, AlgoBox, and more. These can help validate the turtle pattern and guide your entries. Thanks for watching.